As always, opinions vary on the only question that really matters to traders. What's next, up or down? Some point to July's track record. Statistically, it's a month of gains, especially following strong Aprils and Mays. Based purely on history and seasonality, the bears seem to have little ground to stand on right now. Last July comes to mind. It was for me full of short squeezes. Bears were thrown off the train, and the rally kept rolling. There's also that well-known pattern. When the market rebounds from a huge dip and re-enters record territory, as it did last week, it often kicks off a multi-week or even multi-month stretch of new highs. Usually, one major index breaks the record first, then others follow. The Dow Jones, for example, is just about 1% away from its record high. I've got the last several days of the S&P 500 on screen now. I closed my long position the day before Friday. Just to be clear, this is my demo account, which I started on June 16th, so it's still early days. Friday was a bit a pullback. After reaching new highs and running into resistance, investors didn't want to hold long positions into the weekend. But as the new week kicks off, the lows have been picked up again, buying has showed up. As for me, having closed my long position, I'm waiting for a cheaper market. Maybe I'll still get a favorable entry and catch a piece of the July upside, but only with a very small portion of the portfolio. Why even consider playing the upside? Because the record-breaking season has a strong historical precedent. I have a plan in mind to ride the July wave with minimal risk, almost for free. The tariff drama could fade in July, at least temporarily, which would support the market. The negotiations with China, the key ones, are still ongoing, but there's time. A 90-day pause was declared on May 12th, which means it won't expire in July. At the very end of the month, the Fed comes into play. 2 Fed governors have already hinted at a rate cut. Even Chair Powell hasn't ruled one out a cut in July. Even if we don't get a cut on July 30th, the Fed may signal a move for the fall, and the market could rally on that. Last week brought a key jobs report. Personally, I didn't like it. Too few jobs were created in the private sector. The labor market looks weaker. What stood out? Factory jobs were somewhat scarce, although the broader goods-producing sector is probably still growing steadily. Next week we get inflation data, and that's the other half of the Fed's mandate. That report could either cap the rally or give it a fresh push. Oil prices are down this year and may fall further. That's good for inflation expectations. Lower oil often means softer inflation pressure. It's a risky setup. But if inflation surprises to the downside, July could deliver a roaring rally. Sometimes the hardest move for a trader is to play without the ball. That's what I'm doing now. I'm fully aware the situation is fluid. Any headline could flip this market in either direction.